Okay, so today we're doing a little bit of home buying 101, but actually I see this happen with people who have bought multiple houses. I see this happen with people who are refinancing. I see this issue happening consistently. So I want to talk about it today so that it doesn't happen to you. And if you're watching this video, you've probably seen my other videos, so you are going to be well educated for buying a house, refinancing a house, whatever you're doing. So initial disclosures, yes. So 3 days after receiving your application, the lender has to provide to you what's known as initial disclosures. Now, these can be 50 to 80 pages long, and they can be very overwhelming. And in today's modern age, they're delivered to you generally electronically. So it's really easy just to go click, 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 finish, okay? However, it's really important that you take the time to read them. Now, I understand that reading all of it can be like, oh my goodness, like there's every single possibility listed out in them, even stuff that doesn't pertain to you. So I want to highlight today the two big areas that you really need to look at when you get your initial disclosures, okay? So first one, the application. So even if you filled out your application online, I want you to go through it with a magnifying glass, okay? Is your date of birth right? Is your social security right? Is your name spelled correctly? Is your marital status correct? Go through it and make sure you point out every single thing that's wrong. And I would suggest that with your lender, you send them an email that says, hey, I reviewed my initial disclosures on my application. The following is incorrect. Can you please correct for my final loan docs? Okay? Now, the disclosures you should sign as is, because really what they're meant to do is they're meant to show you what the lender has so that it can be corrected for final loan docs. Okay? So that's very important. The other thing you need to look at is the loan estimate. Yes. And if you're looking at the loan estimate and you're like, oh my God, I don't know how to read this. Like, it's okay. Most people don't know how to read it. When we first got it, because we used to do a different statement called a GFE, when we switched over to the new loan estimates, we were like, it was bad for a while. So they're not the easiest things to read. They're just not. And I know that the government spent so much money trying to make it easy, but it's not easy to read. So if you have trouble, ask your lender, call me. I'll always read them. And, you know, I'm sure you'll see comments on this channel where they're like, she read it, you know, whatever. Happy to help, okay? Because these things can be confusing. So don't feel like you're dumb. And sometimes, you know, that's what happens is someone's embarrassed to ask. Do not be embarrassed to ask. I have lawyers that can't read these things. They're not easy to read. So go through your loan estimate. Now, even if the lender said to you, you know, hey Bob, I got you locked. You're locked at 3.5, no points. It's going to be great. Yeah, just sign it all. It'll be good. You need to read it. You need to make sure that you are locked at 3.5. And there are no points because there's two different types of points. There's origination points and discount points. So someone could say no discount points and still charge you an origination point. You won't know until you look at that loan estimate. So you need to look at that loan estimate to protect yourself, okay? And also to make sure you understand the terms of the loan, okay? It's also another really good indicator as to whether you're locked or not. So the loan estimate will actually say at the top whether or not your rate is locked. And often, you know, if you're looking at your disclosures and then you get locked the next day, it's not like they miraculously update. If your disclosures go out when you're not locked, it's going to say floating. Okay. If you're talking to a lender though, like if you call me on day one and I say, yes, I'm locking you right now. And then the next day you get disclosures and it says floating, that lender lied to you. They didn't lock. And that does happen in this industry. And it's because what happens is sometimes lenders are trying to keep clients. So they're like, yeah, I'll get you that rate. I got it, you're locked. But they're really just playing the market. They're hedging that they will get that rate. And they're counting on you not to notice that it's floating, okay? So the loan estimate is critical so that you can understand what's going on with the loan, okay? The other thing to look for in that is impounds. Yes, this is where I see the biggest, I think the biggest miscommunication is about impounds. So impounds are taxes and insurance. And some people like it as part of their monthly payment. Some people don't. Well, in 9 out of 10 loans, you will get a better interest rate if you have an impound account. Yeah, seriously. And it's because the bank knows that they're collecting your taxes and insurance monthly, so they know that those two items are going to get paid. Taxes and insurance are the biggest threat to a lender. Seriously, if the house is not insured and it burns down, that's a problem, because the lender's like, if taxes don't get paid, the county can put a lien on the house in front of the lender. Those are high risk items to the lender. So by including those in your monthly payment, they will reward you with a slightly lower rate. Seriously. So you want to make sure that if your loan has impounds, you know it. Because what I see is I'll have a conversation with a borrower where I'm like, hey, I can lock you right now with no impounds at XYZ or with impounds at XYZ, which is a lower rate. And they go, oh, I want the lower rate with impounds. I go, great. We send out disclosures. Whole time, it's exactly the same, right? And then at signing, they're like, well, wait, I don't want taxes and insurance included in my monthly payment. And you're like, it costs money to get that off. You know, it's not an easy, quick 5-minute fix. So it's important to make sure that you understand the terms of your loan up front and that you discuss with your lender anything you don't understand or that is not accurate. Okay? So I hope this little video on disclosures has helped. If you have any questions, please feel free to call or email me. As I've said before in other